well, let's just say it's not your typical company story,
Hmm.
We're looking at Constronics Infra Ltd, or CIL for short, and we're going to give you the full picture. The interesting thing about CILs is they weren't always, building stuff. They actually started in a completely different world, the world of pharmaceuticals.
Yeah, it's quite the shift, isn't it? Back in 2018, they made a pretty dramatic move going from pharma to, well, construction and trading infrastructure materials.
So what happened after that? Did they suddenly figure out how to, build bridges?
Well, they've been reporting consistent profits since then, which, that's a good sign, right? But it does raise some questions for sure.
Yeah, let's talk numbers. Looking at their screener report, their stock is currently at 150. That's almost a 5% jump just today, November 8th. And with a market cap of 188 crore, they're definitely not a tiny player, Russ. But honestly, what really caught my eye is their ROE, the return on equity. It's sitting at a whopping 118%. I mean, that's pretty remarkable, don't you think?
It does seem impressive at first glance, but, it's crucial to look beyond just those flashy numbers. Even with that ROE, their screener report also points out some potential downsides.
Well, like what?
For example, their stock, it's trading at over 6 times its book value,
Ugh.
which could be a sign that it's overvalued. Something to think about.
So more of the story that meets the eye. What else should we be looking at here?
Well, sales growth hasn't been, outstanding, just around 7% over the past 5 years. And then there's the issue of promoter holding, which is currently at a pretty low 10.6%.
Yeah.
And get this, it's actually gone down by almost 8% in the past 3 years.
Wow. Okay, so essentially, the people who know the company best aren't exactly holding on to a big chunk of stock. That's a little concerning, right?
Yeah, it definitely makes you wonder why. And their working capital days, well, they've ballooned from 128 to 299.
Oof. That doesn't sound very efficient.
Well, no, not really. It suggests they might be facing some difficulties managing their cash flow. And this is where things get a bit interesting.
Okay, so we see they're profitable, but their working capital days are, not great. What else are we seeing?
Yeah, let's dig a little deeper into these reports. Their profit and loss statement, well, one thing really stands out. Their revenue for the last 12 months, it's 17.22 crore.
Okay.
Now compare that to just 0.82 crore back in March of 2023.
That is quite a jump. What's causing that?
Right, that's the big question.
Yeah.
And here's where things get, well, more complicated. If you look closely at their earnings, there's a big increase in what they call other income. And that, of course, does contribute to their overall profit. But the question is, where is this income coming from? Is it something, sustainable? Is it tied to their core business? Or is it just a one-time thing? We need to figure that out.
Right, right. So we need to understand the source of this income. Otherwise, it's like getting excited about finding money on the street without even, checking if it's real.
Exactly. And speaking of money, their cash flow statement, that tells us an interesting story, too. There's this recent spike in their net cash flow.
Yeah.
And, that might be connected to their announcement back on November 4th about a warrant allotment.
Oh, right, right. So they could be getting an infusion of cash. But, one thing that also stands out is this negative tax percentage in some quarters. What do we make of that?
It is definitely unusual. While there could be, totally legitimate reasons for that, like tax credits or carrying forward losses, it's really important to understand what's going on there. We want to make sure there's nothing suspicious happening. Digging into their tax filings, that should give us some more clarity.
Okay, so let's shift back to this warrant allotment. Why would CIL do this? What's the bigger picture here?
Well, there are a couple of possible reasons. It could be a strategic move. Maybe they're looking to, expand their operations, seizing new opportunities in construction and infrastructure. Or it could be a way to address that low promoter holding that we talked about, attract some new investors, try to boost confidence in the market. It's something to keep an eye on.
So this warrant allotment, I mean, it could really change things, right? But issuing warrants can also dilute the value of, shares that are already out there, right?
That's true. And existing shareholders could see the value of their shares decrease if those warrants are exercised.
So it's not a guaranteed win for everyone, right?
Yeah. Definitely something to think about before, making any decisions about investing.
Yeah. It's like adding more ingredients to a recipe. The flavor might change and it might not be for everybody.
Right.
So speaking of adding ingredients, what else has CIL been up to lately?
Well, just a couple of days ago, on November 7th, they released their unaudited financial results for the second quarter of 2024.
Ooh, fresh data. That's always exciting.
Yeah, so this could give us a better understanding of, some of those trends we've been talking about, like the revenue growth and where that other income is coming from.
Yeah, I'm curious, do they also file a statement of deviation or variation in fund utilization?
Yes, they did for
Yeah.
Q2 2024.
Okay. Because that can tell us a lot about how they're managing their money.
Yeah.
And for anyone who's not familiar with a statement of deviation, basically it just outlines any changes in how a company used its funds, compared to what they had originally planned.
Right. So it might show us, for instance, if they've diverted funds to new projects, or maybe if there were any unexpected expenses that popped up. It's worth looking into for sure.
Okay, so we've got those quarterly results to look at, the statement of deviation. Anything else we should be checking out?
Actually, yes. There's one more thing. Back on November 4th, the same day they announced the warrant allotment, CIL also filed the outcome of a board meeting.
Oh, yeah, okay.
And, board meetings, that's where they make the big decisions.
Right.
So this document, it could give us some valuable insights into their plans for the future.
Let me make a note of that. Okay, so November 4th, warrant allotment, board meeting outcome. We've got a lot of information to process here. What's the overall picture starting to look like?
Well, it seems like we're seeing a company that's, in a state of transition, definitely taking steps to potentially change their financial position and maybe even their whole strategic direction. This warrant allotment, it could bring in a much needed influx of cash, but it also raises some questions about potential dilution, as we've discussed.
Right, so for anyone listening who is, a current shareholder or thinking about becoming one, they need to really carefully consider how this might affect their investment.
Absolutely.
What about the board meeting outcome? Any clues there about, where CIL might be headed?
Well, we don't have the exact minutes from the meeting, but it's pretty safe to assume they discussed the warrant allotment
Yeah.
and possibly other strategic initiatives as well. Given their recent profitability, it's possible they're, exploring new avenues for growth,
Hmm.
maybe expanding into different areas within construction and infrastructure.
Okay, so they could be, seizing this moment where they're financially strong to really make some big moves, which, that's exciting, but obviously there's always risk involved, right?
Yeah.
It's like that, that moment in a movie when the hero decides to just go all in, even though, things aren't looking great, and you're just like sitting there wondering, is it going to work out?
Right. It's that classic risk-reward scenario. Their move to construction, it's brought them profits. But those challenges we talked about earlier, they're still there.
The low promoter holding,
Yeah.
the question of whether their earnings growth is sustainable. Their recent actions suggest, though, that they're not, content to just sit back and relax.
Yeah.
But will these moves lead them to success or, a big pitfall? That's the big question.
And that's what makes analyzing companies so interesting, right?
Yeah.
It's like a real-life business thriller,
Right.
full of suspense, intrigue, and some unexpected twists. But in this thriller, we actually have the power to, investigate, analyze, and maybe even, predict what's going to happen next.
Exactly. We're like detectives armed with, financial statements and company announcements, trying to piece it all together. What's really going on here?
Yeah. And like any good detective story, we have to consider all angles, right? And that includes the political landscape. Where does CIL fit in?
Oh, right. We can't forget about that.
Yeah.
There's been, a lot of talk about CIL's involvement in certain government projects.
Mm-hmm.
Some sources are claiming that they've, received preferential treatment, while others are suggesting there might be some shady dealings going on to secure those contracts.
Right.
Just as another layer of complexity to this whole thing.
It does. Construction and infrastructure, they're often very closely tied to, government policies and contracts.
Right.
So understanding the political context surrounding CIL, that's crucial if you want to assess their prospects in the long term.
It sounds like we're stepping into a whole political thriller now.
Well, let's save that exciting chapter for the last part of our deep dive. We want to keep the suspense going.
Okay, so we're back, and we're ready to tackle the final chapter of our Constronics Infra deep dive. We've looked at their financials, unpacked their latest moves, and now it's time to navigate the political landscape surrounding this company.
Right. As we touched on before, CIL operates in construction and infrastructure. Those sectors are often closely linked to government contracts and policies.
Right, and that can be a good thing or a bad thing, right?
Exactly. It's a double-edged sword. On one hand, government projects can mean a pretty steady flow of revenue, but on the other hand, it can also expose companies to a whole lot of political risks.
Yeah, for sure. And there's been, a lot of talk about CIL's government contracts. Some sources are suggesting they've gotten, favorable treatment,
Hmm.
while others are claiming there might be some irregularities in how those contracts were awarded. It's like we've got a political thriller going on alongside our financial mystery here.
It definitely adds another layer to the story. It's important to remember, though, that at this point, these are really just allegations. We haven't seen any, solid evidence to support those claims.
Okay.
But the fact that these rumors keep popping up, that does raise a red flag for potential investors. It's a reminder that even when a company seems financially solid, external factors like, political scrutiny, those things can have a real impact on their performance and stability.
So how can our listeners, cut through all the noise and really understand what's going on? It's like we need a compass to navigate this.
I think the key here is to approach all of this information with a healthy dose of skepticism. Don't just get caught up in the hype or the sensationalism, right? Focus on getting your information from reliable sources, consider their potential biases, and always cross-reference everything to get, a balanced perspective.
Okay, so it's like being a detective again. But this time we're investigating the political scene, not just the financial statements. We need to, separate fact from fiction.
Exactly. And remember, the political landscape can shift pretty quickly. What seems like a safe bet today could become a liability tomorrow. Staying informed, being ready to adapt to those changes, that's crucial for any investor.
So it's not just about the numbers, right? It's about understanding the bigger context, the political, the social, even the environmental factors. All of that can affect a company's success.
Absolutely. It's about connecting the dots, seeing the big picture. And in this case, those dots lead us to the political arena and those allegations surrounding CIL's government contracts. It's a reminder that, no investment exists in a vacuum.
So how should our listeners factor in this political uncertainty? Is it a deal breaker or is it something they can kind of look past?
It really comes down to their individual risk tolerance. Some investors, they're comfortable with a higher level of risk, especially if they believe that, the potential rewards outweigh those risks. Others, they might prefer to be more cautious and avoid companies that are, facing political headwinds, even if they have strong financials. There's no right or wrong answer here.
So it's a judgment call
Yeah.
based on, personal circumstances, investment goals. But one thing is clear, you can't just ignore the political context. That's like navigating a maze blindfolded. You're going to run into some walls.
Exactly. Understanding the political landscape, it's an essential part of due diligence, especially for companies and sectors that are, closely tied to government activities.
Okay, so let's wrap up this deep dive.
Hmm.
We've looked at CIL's financials, their recent moves, and the pretty complex political backdrop. What's the verdict? Is Constronics Infra a hidden gem or a ticking time bomb?
Well, I think we've